Okay, so you've watched lesson number 1 about the truth in Forex markets regarding manipulation, and if not and you want to check it out, please click the link in the top right hand corner of this screen to take you to that quick first lesson. So the next thing now is to find yourself a reliable and decent Forex broker. Now I'm in the UK and I don't have the time to look for every country's broker, so you'll have to do your own research for your own country. Having said that, I can give you a few pointers as well as adding some links below to UK Forex brokers, 2 of which I use myself. I'll also add 1 or 2 links to some global brokers. Okay, now one of the first things you can do to check on a decent Forex broker is to check some reviews. Now, when you look at these reviews and you're searching to find out something about the broker that you've got in question, or a few brokers, don't focus on individual negative comments. When you do any form of searching for a specific broker's reviews, you will always, without doubt, get unhappy customers. It's a simple fact. Some people will always have something negative to say and to complain about no matter what. So get the overall review rating and do not focus on individual negative comments. Another thing you need to consider for your potential Forex broker is, are they regulated? Make sure they are by your country's governing body. In the UK it's the FCA, the Financial Conduct Authority. I'll add a link in the description below so you can take a look at them. Always make sure your considered broker is regulated by your country's regulating body. This is very important to protect you from any fraudulent activity, and so they're open. More on these things as we go along. Another thing to consider when you're looking for a Forex broker is to test the demo mode. Always test it first so you're sure you're okay with it, as many of them are different. So it needs to be a platform that you like the look of and the feel of when you're placing bets, adding stop losses, setting take profit targets, etc. Also, do you like the onboard technical analysis tools they offer on the platform? These are all generally the same for different platforms, but can you get on with them individually? Okay, do you feel drawn to this platform? You need to have a good go of the demo mode, without money obviously, because it's a demo mode, but that's what you need to do. You need to get familiar with it and see if it's for you. As I've said, a lot of platforms are different in their application, and some are more user friendly than others, so you really need to do that. So find a platform that suits you and that you feel drawn to, as some are slightly more complicated than others, so test a fair few out. Also, look for educational videos supplied by that particular broker for their actual trading or spread betting platform. A good broker will automatically have videos to help you around their platform. In all honesty, it's a bit of a no-brainer really for me personally. Any decent broker will automatically have videos to help you out with their platform. Another thing to consider is tight spreads. Look for a broker that has relatively tight spreads. What are spreads, I hear you say? Well, in simple terms, the spread is how your broker makes money when you are spread betting, which is what we are actually looking at taking part in. The foreign exchange, Forex or currencies, for us is nothing more than a bet. Spread betting is actually what it says, a bet. You will be betting a fixed amount on whether the price goes up or down. This is different to actually buying a stock or share and selling it at a higher price for a profit, in which case the broker charges a fee taken from a percentage of your profit or a set fee per trade, depending on the broker. So we Forex traders, or bettors, are not really trading at all. Instead we are betting, which is a form of trading, I guess, as we are trading an opinion, one could say, whether the price is going up or down. Anyway, getting back to the original question, the spread is the difference between what is called the bid price and the ask price. or the sell price and the buy price. So the bid price is the sell price and the ask price is the buy price. The point is they're different. Yeah, it can get a little confusing, I know, but it will become clearer when you start trading. And to be honest, you really do not need to know or understand exactly how or why this happens, but you do need to know it is in place on your chosen spread betting platform. So you do need to know how to adjust stop losses and take profit targets correctly to allow for it, or you'll keep getting stopped out and probably blame your broker for it. I'll explain this in more detail in future videos. Now, choosing a broker that has tight spreads is important, because if you place a bet on a currency to move up and your stake is, say, £1, £2 or £5 per point, and that currency has a 2.5 point spread, as many do, then you are immediately in negative drawdown. So if you bet £5, you are in £12.50 negative drawdown straight away as soon as you enter the trade, because 2.5 or 2.5 times your stake, say a fiver, is £12.50. 2.5 fives is £12.50. So as soon as you enter that trade, you're £12.50 down. This makes scalping the market difficult because you're fighting uphill from the off. More on scalping later, but it basically means taking a small profit and getting out quickly. Choosing a broker that has tight spreads will not always be clear, because they all boast tight spreads. The spread is also different for different currencies and commodities like oil, gold, silver, soya, cocoa and coffee, for example. The spread also changes at certain times of the day, so be aware of that, but more on that in another video. But just as an example, the euro dollar can be like 0.5 or 0.7 spread, so it's half a tick or thereabouts. So as soon as you enter the trade, it's much easier, because you're all, you've only got a half tick to make up, and if you've got momentum and you're going in the right direction, it's not a big issue. But if you're 2.5 ticks, straight away in negative, which you are on some of these currencies and more on some of them, but you would be silly to trade those. But more on that in other videos, as I've said. But the point is, again, this is one reason why you need to choose a broker that is regulated by a recognised governing body of your country, so you get a fair crack of the whip, so to speak. Another thing you need with your Forex broker, your potential Forex broker you're thinking about going with, is, are they transparent? Transparency is very important. Your potential chosen broker should be transparent. Do they have a business address that you can actually check up? Do they have a landline phone number? If so, call them and see if they are actually there. See how quick they answer. Okay? Don't feel awkward about saying you're new to this and you're checking up on them. Really, do not. Be comfortable in asking questions. It's really important. Ask them point blank. How do they make their money? Be straight with them. And if they're worth their salt, they won't be offended by your questions, not one bit. And they'll do everything to make you feel comfortable and be completely open and clear about everything with you, which in all honesty should already be made clear on their website. It's just that simple, it really is. But the best way is to call them, which brings us nicely onto our next requirement for a good broker, and that is customer support. Now, for me, to expect 24/7 customer support is really asking a little bit too much, in my opinion. But we can certainly expect office hours for sure for your country at the very least, can't we? Or at least when your country's market is open. And like I've said, they should be very open and even somewhat friendly with you, in my opinion. If you get any attitude in any way at all, my suggestion is to give them a big miss for sure. Customer support in any business should be friendly, nice, open and helpful. It's that simple for me personally. Okay, this concludes our second lesson in Forex trading for beginners. I hope it's making sense, as I'm trying to keep it as simple and as interesting as possible, so it's easy to understand and enjoyable to watch. To be totally honest, you can make anything as complicated as you feel like making it, but keeping it simple is where it lies for me, and I hope I'm managing to achieve that so far. As I've said before, this subject is pretty saturated on YouTube, so I don't want to spend a lot of time making these videos for nobody to watch them. So, if you did get anything from this video at all, I would very much appreciate a thumbs up and possibly subscribing to the channel to help me to keep motivated, so I can continue sharing what I've learned over the last 12 years or so betting on the Forex markets. Either way, thanks for watching, trade safe, and good luck in your financial endeavours. All the best.